Hey guys, what's going on? Nick Tsoukalis here with Key Credit. So I want to change our direction just slightly today. So typically we're talking about consumer credit. Okay, we know you're personally guaranteeing everything, you're signing for things, credit goes up and down, but I want to change gears today and talk a little bit about business credit. So let's say you're a small business owner, okay? Why do I get clients all day long, or small business clients all day long with credit issues? Typically it's because the business does this. And just like all businesses, there are a lot of ups and downs, and that can have your personal credit really take a tumble. So let's think about this, right? First thing we do when we start a business is we go see our attorney. And what our attorney does is they say, listen, you got to protect yourself. You got to protect yourself in case something happens at the business. You got to get your business put into an LLC or a C Corp or an S Corp. You need to separate your business from your individual credit profile or your individual finances, okay? And we do this. But even though we do this, we still take a tumble when the business does one of these, okay? And why does that happen? The reason why that happens is because as a small business owner, usually banks and lenders are asking us to personally guarantee everything under the sun, okay? We go to get a business loan, personal guarantee. We need to lease a truck for the business, personal guarantee. We need to get a month's worth of supplies for the business, personal guarantee. So what happens when the business goes bust? Even though the corporation could bankrupt itself, okay, they can still come after you personally. So you're still on the hook for every risk that the business has taken, okay? And that's why 99% of small business bankruptcies result in personal bankruptcies. And it doesn't need to happen. So the first tip I'd give you as a business is take a bigger approach. Most medium to large size businesses, typically they have some sort of credit manager on staff. And what they're doing is they're actively building up the business credit profile. So think about it like this. Do you think the CEO of Apple or Microsoft, do you think they're personally guaranteeing when Apple needs to buy some supplies or they need to get some inventory from Staples, they need to get some notepads for the office? Absolutely not. Why is that? Because typically they have a really well-established, really built-up, robust Dun & Bradstreet business credit profile, or they have an Experian credit profile that's really robust and healthy, or even an Equifax credit profile that's really healthy. Now you're probably thinking, well, I'm a small business. I don't need to do all that. I can't do all that. I'm just a little guy. Well, actually, it's a misconception. You can actually build up just as high of a credit score as the Apples of the world, and the Microsofts of the world, and the Staples of the world, and the IBMs of the world. You can be just as big in terms of credit that they can be. In fact, you're probably unaware of the fact that there are a lot of creditors and lenders that will allow you to finance things without a personal guarantee. Does it take a little time? Yes, it does. Typically takes a good 6 months to a year to really build up a robust, strong, healthy business credit profile. But once it's there and once it's working, you can get away from personally guaranteeing everything, okay? So number one, when you're building up your business credit profile, what you're doing is creating a true separation of business, okay, and individual. That right there is going to help you sleep a lot better at night, okay? The second thing you're doing is you're increasing your ability to borrow, okay, at lower rates. A lot of banks and lenders will simply turn you down for a small business loan, even if you have a 750 personal credit score. Why is that? Because they're checking both now, okay? The second thing is, or the other thing is the amount that you can borrow. A lot of people don't realize that when you're borrowing with a healthy business credit score, along with a personal credit score that's healthy, typically you're borrowing 10 to 100 times more, or they're giving you access to 10 to 100 times more in terms of credit limit. So if you went to one bank and you're getting $10,000 in credit limit just based on your personal credit score, if you were to accompany that with a healthy business credit score, you're going to borrow 100,000 plus on average. Those are big, big numbers. And when you're leveraging at super low rates, you have more access to capital, you can weather storms a lot easier, you can take advantage of bigger opportunities, you can take on bigger clients. There's just so much that you can access. So if you are a small business owner, okay, and you are concerned about your personal credit profile, the first thing you want to do is build up your business credit profile. Let's create that separation of business and individual. The second thing is let's take advantage of these super insanely low interest rates that are out there that are given to businesses that have established business credit profiles. So it's just way more money that you can access at super low rates. If you're interested in separating that individual with business credit, you're interested in learning more about business credit, or you're interested in taking your small business and just really having it flourish over the next 12 months, check us out at keybusinesscredit.com. I have a free ebook offer in there. Pop in your email. You can download it right on the spot. It's amazing information, and have a great day.